Let's move on. Then JSW Steel, as I said, was a stock under a bit of pressure, down almost about 2% or so. The company reported a solid set of Q1 numbers, benefited from the lower input costs, while there was a big improvement in the overseas operations as well. Nigel had a chance to speak to Jayant Acharya, who's the Joint Managing Director and CEO at JSW Steel. He began by asking him about their realizations, which were higher, and also the EBITDA per ton. So let's listen in and we'll come back.
Yes, so our results in terms of EBITDA per ton is on a consolidated basis. So we have declared results on consolidated basis, and our EBITDA per ton is 12,345 rupees per ton in Q1, which is slightly higher than the Q4 numbers. The India results on a consolidated basis include our operations at BPSL, and that number is about 11,800 rupees per ton EBITDA. The prices in Q1, we have been able to, while the prices did correct internationally as well as domestically, we were able to set off some of that with a better export booking, which we had in the earlier months, which went into Q1, and also a better mix of value added and geographical mix, which we could manage. With that, we have been able to get a realization which is slightly better than Q4.
So two-part question then. Could you tell us prices as of today, how does it compare with the average of the past quarter? And also coking coal cost, you had alerted us that it's likely to go up in this quarter in comparison to last quarter. How much higher has it gone?
So coking coal prices last quarter was about $274 for us. And in this Q2, we expect it to go, in Q1, it has gone up to $285 per ton. So it's gone up by $11.
All right. And realizations as of today, how does it compare with the past quarter? And coking coal as well, will it slide from this $285 per ton?
Yeah, so realizations past quarter, I would say the price corrections, as all of us know, has happened in the global steel industry per se, and that has been reflected in India as well. The exit numbers of June have seen a better part of correction, and it will part of that impact will be seen in the July-September quarter as well. But the coking coal prices have corrected, and therefore the cost will therefore go down, and we expect a $45 to $50 drop in coking coal prices going into Q2.
Okay, so EBITDA per...
which will offset any kind of price impact then.
So EBITDA per ton then will improve from here on, right?
I would say that we will be able to, margins would be range bound. It would be difficult to comment exactly on how the prices would move, but yes, I expect prices to have bottomed out, and so therefore the margin should be range bound.
Now, US and European operations, out there, if I calculate, the EBITDA has come in at more than 550 crores. That's much better than what we have seen in the past. Do you expect this US and Europe operations to continue delivering the 550 crores on a quarterly basis?
So you're right, your overseas operations did quite well in the last quarter. Our overall overseas EBITDA was 570 crores. Baytown, the plate mill, delivered good numbers with an EBITDA of $45 million on better volumes. In Ohio, also, the capacity utilization went up. So from a negative EBITDA last quarter, we have become positive, $2.6 million of EBITDA in Ohio. Again, on the back of good volume and capacity utilization. In Italy, again, very good numbers on the back of rail orders, on back of a good capacity utilization of 88%. The overall EBITDA at 18.6 million euros have been very good. So the overall overseas have therefore been very supportive. Having said that, I would also like to say that as we know, some part of the global headwinds exist, and some price corrections which have taken place already may play out in this quarter. Also, there is a holiday season during July to September in various parts of the world. So therefore, there could be some impact of that playing into this quarter.
So what is the run rate we should work with then for the overseas operations?
It's difficult to give a run rate, but I would say that Italy will continue to do well. Italy has good orders in terms of the rails from the Italian government and from international export orders as well. I expect the Baytown operations to do reasonably well because the renewable sector is consuming a lot of plates. The Ohio operations, because the prices have gone down, while the capacity utilizations will be better, there may be a pressure on the margins in Ohio.
Got it. All right. There was this other article a few days ago that said that JSW Steel is looking at picking up 20% stake in a coal mine in Canada. Do you want to clarify on that? Are you all interested? If yes, at what valuation?
So we are looking at raw material security, and our aim is to have iron ore security and coal security as we build our capacities in India. We are also looking at metallurgical coal assets in the world, good metallurgical coal assets in various parts of the world, including Australia and Canada. Tech is one of the assets we have looked at. However, there is nothing at this point of time I'm able to comment. It's just an initial kind of a feasibility study which we are doing. So as and when we are in a position to give any comments, we'll come back.
Where is that NMDC Steel bid now at? You all were interested. Where has it moved?
Yes, so we have filed our expression of interest and the data room has opened and we are having access to the data. So the study is going on right now and we will take a decision at the right point.
Will you be willing to pay $1 billion for $1 million?
It will be very difficult to comment on any kind of payment or valuation at this stage.
Okay.
The data room numbers are just coming in. We will have a look at all the numbers which come in and then take a view as to what we can do.
All right. Final question then. What about the debt number? Where is it headed from here? On a quarter-to-quarter basis, there's been some increase. At what level, absolute level, will the debt number peak out?
So there's been an increase on account of some of the working capital increase which has happened. Two reasons. One, we have paid high cost metallurgical coal imports. We have paid out and that has gone into the working capital. The second one is some inventory additions which have happened in Q1 due to channel destocking and some impact which we had on sales due to the cyclone in the later part of June. So some of the material has got held up at the ports. So this has gone into the working capital. We expect once the merger of JISPL is completed, we expect about 3,000 crores of debt to get consolidated. However, we are looking forward to reducing the working capital impact which has gone up. And therefore, the date closing for this year would be in a situation better than what you probably see today.
Okay, that's JSW management chat.